$33.7 trillion in debt. That's the official number of the U.S. national debt. But what's the big deal about a big debt? Well, one of the rating agencies, Moody's, is sparking some concerns, and we've got a downgrade. That should be huge news, but indeed it is not. The markets don't care, and gold and silver don't seem to care either. I'll explain as we explore. They may not care, the establishment, the media, the markets in general, including the precious metals markets, but you know what? You and I, we care. This is one of the reasons why we stack gold and silver. I'm going to be referencing two pieces here. The first from CNBC talks about how Moody's warning on the massive U.S. debt burden has really turned into a non-event. The old saying, it's time to chomp down on a nothing burger. That's exactly what's going on here. Wow, crazy. There was a time when bad news about the U.S. debt would send markets into a tailspin, but not this month. Markets on Monday shrugged at a warning Friday from Moody's Investor Service that it was lowering its ratings outlook on treasuries. The three big ratings agencies said high levels of government debt and deficits coupled with political brinkmanship in Washington could jeopardize the global standing of political issued fixed income. When Standard & Poor's and Fitch issued similar warnings, they sent at least a temporary shockwaves through Wall Street. But with the domestic fiscal and political mess seemingly old news, the rating service saber-rattling just doesn't have the same impact. And this is coming on the week of a potential government shutdown. By the 17th, if the Congress does not come together, we could potentially see a shutdown. But you know what? People just don't seem to care anymore. It's crazy. It's a new normal we're seeing. If we go from AAA to AA, what does it practically mean? It doesn't really mean anything. There's still going to be demand for U.S. Treasuries en masse, according to Michael Reynolds, Vice President of Investment Strategy, Glen Maid Investment Management. There's no piercing insight from Moody's that they have proprietary information that nobody knows about the U.S. governments. So it's really a non-event, he says. No one has to tell investors about the $33.7 trillion U.S. debt and the $1.7 trillion deficit in fiscal year 2023. Both are well-known issues with which Wall Street wrestles daily. The Moody's news merely echoes those problems. Despite its warning, the service is the only one of the big three agencies that still has a AAA rating on the U.S. debt. Fitch lowered its rating in August, and S&P, Standard & Poor's, made its move 12 years ago, and that was big news then. Things were relatively quiet in the markets on Monday, the first trading day after the Moody's announcement, and it was taking its outlook to negative from stable. Major stock market indexes posted muted gains, while yields on long-dated treasuries rose slightly. And we know why gold and silver provide that ultimate store of value and ultimate security in these times. Precious metals provide protection against economic uncertainty. They also cannot be hacked. However, we aren't using gold and silver every day to purchase goods and services. So likely, we are engaging in business where we need to present our personal information, which is then sold to data brokers who profit by selling your information to robocallers, telemarketers, spammers, and anyone else that wants to learn more about you. That's why I'm excited to tell you about today's sponsor, Aura. Aura will identify data brokers that are exposing your information and automatically submit opt-out requests on your behalf. They'll even opt you out of junk mail and telemarketing lists. You can use my link at aura.com/salivate metal to try 2 weeks to see how many data brokers are sharing your information. The link is in the description, or you can scan the QR code on the screen. Aura also monitors your emails and passwords to see if they were involved in a data breach and exposed on the dark web, and gives you recommendations on what to do. Aura's app also features a VPN, password manager, real-time credit and identity theft monitoring, internet parental controls, and protects your devices from malware. Aura has almost every internet safety tool you'll ever need, all inside one app. Safety and security are the reasons we stack precious metals, so limit your exposure to these data brokers and go to Aura.com, salivate metal, or scan the QR code now to start your free trial. We'll continue to understand that for those of us that really have been paying attention. And we know where this all ends. And it ends with currencies continuing to be downgraded in value by inflation, debt continuing to rise, and all of that punishes us, especially those of us who aren't millionaires. You know, we get hit the hardest on these types of things, which is why you're going to find more and more people who aren't millionaires stacking gold and silver, because gold and silver aren't there to make you rich. They are there to protect your wealth. And the next piece I'm going to be looking at here is from Kitco. And we have seen a little bit of a move to the upside with gold and silver today, but really not by much. Gold remains below $19.50 an ounce, but are seeing a positive start to the week as investors react to Moody's negative outlook on U.S. debt. Late Friday, after North American markets closed, the rating agency affirmed America's AA rating. However, the firm's outlook on the credit rating of the United States was changed to negative from stable. As the start of the Asian trading session on Sunday, and we watched it here on a Sunday night market watch, December gold last traded $19.45 an ounce. But it is now, as I record this video, the markets are up slightly, 0.38% for gold, up $7.40 to $1,947.10 an ounce. Silver is only up 2 cents today at $22.39. Platinum and palladium, however, they've rebounded with healthy margins. Platinum over 2%, palladium almost 2%. In the context of higher interest rates, without effective fiscal policy measures to reduce government spending or increase revenues, Moody's expects that the U.S. fiscal deficits will remain very large, significantly weakening debt affordability. And they also said that domestic political instability was one factor behind the downgrade. Congress has been unable to pass legislation to fund the government past November the 17th. Another potential government shutdown has put renewed focus on the nation's growing debt as interest rates remain elevated. And this continued political polarization within Congress raises the risk that successive governments will not be able to reach consensus on a fiscal plan to slow the decline in debt affordability. And that's just it, slowing the decline. That's kind of what we've been managing here. No matter who's in power, both parties have contributed to the debt, and in a great measure, there's no question, enthusiastically. And really, it is a problem, but, you know, people don't seem to care. The politicians don't really care that much other than lip service. And it's crazy. Downgrade also comes after U.S. Treasury sold $24 billion in 30-year bonds in a disappointing auction. Keep in mind, it's the Fed that's buying a lot of those treasuries. The downgrade also comes, noted that the analysts have noted that the result of the lousy auction, primary dealers who buy up supply not taken by investors had to accept 24.7% of the debt on offer, more than double the 12% average for the past year. We didn't really see much news about that. It's crazy. Commodity analysts have been bullish on gold in part because of U.S. debt issues. In a recent interview, Ryan McIntyre, managing partner at Sprott, said the potential for a credit risk event because of a sovereign debt concerns could help propel prices well above $2,000 an ounce. I don't think that's unrealistic for gold. And we may see silver benefit from this too. Although, again, a lot of people, I'm seeing more and more of it as I'm getting a variety of viewpoints from others, analysts on this channel. And there's a lot of negative feedback on silver. But you know what? You think about it, as poor as silver has done from what you think it's done, and look at it over the long course of time. If anything, silver has been a stable store of value over the long course of time. If you look at it at a chart, over the past 10, 12, even 20 years, taking into account what we saw in 2011. You go back to 1980, much the same. The anomalies were there of $50 silver both times in nominal dollars, not real dollars. Even if you keep those in, adjusted for inflation, silver has done well over the long course of time. But we have to be patient. We have to be persistent. And I'm not talking about just going out and buying silver blindly. I think you got to be smart about how you purchase silver. Do not be swayed by anybody on any channel, on any platform to buy based off of fear or anything like that. You have to do your own due diligence and understand the markets and understand how silver is priced and make decisions accordingly. In fact, I bought some high premium silver here recently. These 2 pieces of silver aren't even a full ounce, and they cost me $185. Yes, indeed. These are the new United States Mint reverse proof Peace and Morgan dollars that I got here. Of course, they're special in so much this is the first time that the U.S. Mint has actually done something like this for the Peace and Morgan dollars, a program that started in 2021. But nonetheless, the Perth Mint's been doing this kind of stuff for years, and this is considered BU and not necessarily reverse proof. Pretty amazing quality that the Perth Mint has. The United States Mint did a fairly decent job on these, but there are some issues that I have with the sets that I got. But nonetheless, I think it's time to understand and realize that, hey, you know what? In the end, there's a lot of different ways. There's a lot of versatility in the silver marketplace, especially in terms of price, such as high premium silver like this. But this is the kind of silver you don't stack. And then you have gold and its various different options as well, too. In the end, we hold our silver and our gold to be self-evident that they, by their very nature, are wealth preservation devices over the long course of time that can protect you from economic instability. Part of that economic instability includes inflation, which we are seeing now. It also includes deflation. It's proven itself time and time again. Both metals have. I think the more people realize that and able to hold on to gold and silver and look past the noise of the daily movements of price, which, by the way, I fully and wholly admit that I contribute to that noise because I do talk about the markets, but I talk about them just as part of the news, which is part of the purpose of this channel. But I always like to talk about how in days like today, where seemingly we should see these markets kind of go up and we should see silver and gold pop with news like this, it's not, because there's a lot of nuance in the markets, but there's also this era of this feeling that, well, hey, big deal. A lot of people don't really seem to be that concerned about the debt and deficit spending, and there should be much more concern about it than there is. So I hope you found this video informative, insightful, and educational. Let me know what your thoughts are in the comment section down below. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.